Bitcoin, the haven crypto bulls hoped for, is more a barometer of risk. Godbole. Bitcoin, rather than behaving as a digital gold, has solidified as a proxy for risk, validating FX market participants who track it as a gauge of speculative sentiment. President Donald Trump's trade war has introduced significant volatility to financial markets since March, prompting investors to chase assets they believe provide a hedge in this turbulent environment. What's clear? Bitcoin, BTC, is not one of them, much to the dismay of bullish investors who have long thought of the largest cryptocurrency as digital gold, either as a store of value or a haven investment. The reality is that since the onset of the trade war, Bitcoin has become more closely correlated with the Aussie dollar-yen pair, Australian dollar to Japanese yen, the foreign exchange market's risk barometer. Data from TradingView show the 90-day correlation coefficient between Bitcoin and the Australian dollar to Japanese yen pair flipped positive in late February, and has since hit the highest since November 2021. The tit-for-tat tariff war between the two nations has led to a staggering 245% cumulative levy on Chinese imports to the U.S., leading to Federal Reserve Chairman Jerome Powell reiterating stagflation risks on Wednesday. The correlation of 0.80, the maximum value is 1, is considered strong, implying that the two variables, BTC and Australian dollar to Japanese yen, are closely related in their movements in the same direction. In contrast, Bitcoin's 90-day correlation with gold flipped negative in late February and has since dropped to minus 0.80, just above the minimum -1. It means the two are closely related in their movements, but in opposite directions. The Australian dollar, being China-sensitive and the home currency of a commodity-exporting nation, is seen as a risk currency. The yen is a safe haven because Japan has been a net international creditor for decades with near-zero interest rates. When global markets are optimistic and commodity demand rises, the AUD typically appreciates, reflecting a higher risk appetite among investors, and the yen drops. The opposite holds true when they become risk-averse. Traders, therefore, monitor Australian dollar to Japanese yen as a risk indicator, viewing uptrends as positive signs for risk assets like stocks, and vice versa. Bitcoin, which was already emerging in a comparable role, has strengthened its position. The correlation data indicates that BTC is now as much a proxy for risk sentiment as Australian dollar to Japanese yen.